Okay, well, my name is Egan O'Brien from PFS Mortgage, also known as Private Financial Services. So first, I thought I would answer the question that some of you still may have, which is, who the heck is this guy? So with it being my first year in the group, I figured I'd give a little bit of background on who I am and some things about me. So I was born and raised in Easton, Connecticut. Lived back in the woods to a big Irish family. I'm the second oldest, one of five kids. At the bottom, that's a picture of me and my family. Actually, my sister to the left of me, Caitlin, and my brother, Kieran, on the end. They recently just joined the family business the last couple months, so they'll be part of the team. And then the picture on the right was from this past weekend at my cousin's wedding. That's my girlfriend and I. After I graduated high school at Joe Barlow High School in Reading, I went to Salve Regina University in Newport, Rhode Island, which absolutely loved Newport. It was an amazing time up there. I graduated with a global business and economics degree and a minor in business administration, and played football there for 2 years. And then my journey into mortgages. So after I graduated college, my major was so broad, I kind of got into the working world with like, what the heck do I want to do now? So I had a couple insurance job offers, a couple other things, but I decided, I kind of grew up in the mortgage industry. I knew a good amount about it for somebody coming out of college. So I figured, why not just jump into the family business, see how that goes. And I was going to give myself a year and see how I did then. So after my first year in mortgages, I absolutely hated it. I couldn't stand it. I finally got my mortgage license in 2 months after I graduated college in August of 2015. And I originally went out and was trying to sell mortgages to people to get new clients in. And I quickly realized that I didn't have the foundation that I was looking for to be knowledgeable and helpful the way I wanted to different clients and different people I was meeting. And, I didn't want to feel like I was BSing anybody. So right around that same time, our processor in our office retired. And this ended up being the best thing that ever happened to me because I slid into her role as our mortgage processor. And this was the best experience I ever got, and really the best thing professionally that ever happened to me because I learned the mortgage process from start to finish, an application all the way to closing, post-closing, inside and out on thousands and thousands of different mortgage scenarios. And that really gave me the confidence that I needed to go forward and be a good salesperson, a good advisor to help out people with really that back knowledge of how the entire mortgage world works. And the PFS story. So my parents started the company 31 years ago. They're very proud of that, obviously. So they actually met in the mortgage industry. They were working for a bank in Westport. My dad was the head sales guy and my mom was the regional manager. So they met and then they were working for this bank for a long time and trying to make changes that just weren't happening. So right around when they were both in their early 30s, they decided to create their own company, called it Private Financial Services, because originally they wanted to branch out into other financial services, but the mortgage industry just took off. So they focused on mortgages. And then I always think this stat is pretty interesting because a lot of mortgage brokers went out of business during the financial crisis. And really the mortgage industry in general had a really black cloud over it. So from 2008 to 2010, 45% of mortgage brokers in Connecticut went out of business. And this was the time period my parents were the busiest because they were the ones doing the things the right way and really helping out our clients. And I think this is kind of a testament to the longevity that we're able to make it through this obviously tough time. And then the PFS difference. I don't want to go too deep into some of these, but I just wanted to give a little background on what makes us different from any other bank out there. First is technology and ease of a large company, but the personal touch of a family-owned and operated company. So we work with tons of different lenders. A lot of them are even publicly traded companies, and they spend a lot of money on technology. In this technology, they give all of us for free. So automated underwriting systems, online marketing tools, application tools, they make it very easy. So the technology is right up there with any other type of a Rocket Mortgage or Bank of America, anything like that. But it comes with the caveat of a personal family-owned business. When you call somebody, text somebody, we actually answer the phone. We're here for you to walk you through every part of the process. And we really focus on not being transactional. Like a lot of other mortgage companies, they just want your purchase today. They just want your refinance. We don't really care. Obviously, we want the business, but much more important to us is the relationship. I want to do your mortgage today, but I also want to do your refinance in 5 years, your mother's mortgage in 10 years, your second home purchase in 20 years. We really want that relationship. And then obviously that the business got into second generation is pretty huge for us. And I actually think it's pretty special that I was able to get into the business when I did, because like I was saying, there's a black cloud over the mortgage business or mortgage industry after the financial crisis, and nobody young was going into the business. So when I got into the business, everybody was in their 40s, 50s, 60s. Nobody was around my age. I still go to mortgage conferences, and I'm the youngest person there by 20 years. So I think it is pretty cool to have a couple younger generation getting into the business at our ages now, because in a couple of years we'll have that good experience. And then our rate structure. So we have our lenders, they basically sell the rates to us wholesale, and we charge a percentage on top of the rate. So we charge a very small amount because we're a small company and we're able to be nimble, and that's just kind of the right price point for us. So this has enabled us, in my opinion, to basically beat anybody out on the rate side of things. It gives us a lot more flexibility. So I think we're the caveat of, not really you get what you pay for. We're actually a cheaper option and a better option at that, just ease wise. And then another thing we do that's interesting is pre-underwrite every single loan that comes in before we send it out to a lender. We make sure in-house that you're going to be approved, there's not going to be any issues. And we can usually tell that to somebody after 15 minutes of having a phone conversation with them, give them the confidence to go forward. And then jumbo adjustable rate mortgage products is something that we have a relationship with 2 local banks in the area, and they have top-notch jumbo rates that nobody could really touch. So this is a market we try to hone in on, because this is a pretty good value add for us. And then a lot of people say, oh, you're in sales. And I always hate that one caveat saying I'm in sales. I like to think we're more of an advisor role. So I just wanted to give it some examples of how we've advised our clients in order to, have the mortgage part of your financial health rock solid and have that kind of trickle into other assets of your financial well-being. In this first example, this client came to me, was a good friend of mine, and he was okay. He wanted to put 20% down. And then I realized after looking at everything, he was debating putting 10% down or 20% down because he wanted to put 20% down to keep his monthly payment a little bit lower. So with doing this, he was liquidating a ton of stock and investment accounts he had that were doing really, really well. So when I took a look at it, and I advised him, mortgage rates are so low right now, leverage that debt, take advantage of that debt. So I was able to come up with this scenario that actually benefited him a little bit more in order to keep his costs down. So the solution we came up with is, instead of putting 20% down, put 10% down, and that saves you $50,000 in your pocket today to put 10% down versus 20%. And that's only going to cost you $300 more in your mortgage by putting that 50% more down with the mortgage instead of out of your pocket. And so instead, to keep your monthly payments down, that's a little typo there, but pay $20,000 to pay off your car loan that he had outstanding. And that car loan had a $500 monthly payment on it. So he really, in turn, saved $30,000 in his pocket today and $20 or $200 a month. And that $30,000 stays in investment, and that $30,000 is going to keep growing. So it's a way we kind of played off his debt obligations to get him to the right point where looking at his overall monthly debt and overall savings. Because I always like to use this one client or financial advisor that I read. He really focuses on, instead of being your financial goal being debt-free, focus on accumulating wealth. And right here, this is a great example of that. So I had a borrower come to me, and he was looking for just a normal rate and term refinance. He wanted to save a little bit of money to do some renovations on his house. And we quickly noticed that he had a ton of credit card debt and a ton of other outstanding debt. So his first mortgage we were going to pay off $683,000. Then he had a student loan of $262,800 and credit card debt of $69,000. So we had total debts of just over $1 million and monthly payments of $7,000. So instead of keep doing these renovations on his credit card and things like that, we proposed this opportunity to him. Instead, take out one lump sum mortgage of just about 1.3 million with a new payment of 5,700. This saving him just about 1,400 a month. And we got $315,000 cash in his pocket now to use for renovations instead of to keep putting debt on his credit card. So this is just a prime example of using your primary residence and using the cheapest money you can borrow. And I mean, this is just a home run situation. Saved $1,400 and you got 300,000 cash now to use for renovations, investments, all different kinds of things. And I think I'm kind of nearing the end, Alex, am I? These are just some referrals I put in here quick, but I kind of want to open it up for questions if anybody has any questions.
We only have time for about one. Well, let me be the one that asks. Are you licensed just in Connecticut, or can you service clients who are in Westchester County or in New York?
Yeah, good question. So we are licensed in Connecticut, New York. We really focus on Fairfield County being the bread and butter, but we are licensed in New York as well. And we are working on getting our Florida license as well.
All right, thank you. Well, if you haven't already done a one-on-one with Egan, I highly suggest that you do it because you'll learn a ton. He's a great guy and he's an amazing mortgage broker, so you should definitely reach out. And he's very hands-on, so he doesn't just sort of pass you over to the processor and just wait until he gets his commission. And by the way, you don't pay him, it's the bank that does.